Welcome to the BF Anderson Technical Report for February the 10th. Over the years, I have analyzed thousands of investments, and it really is shocking to me that how few really exceptional investment opportunities are available out there. I probably look on a daily basis. I may look at, say, 500 different stocks a day, just more than probably an average individual would look at in even a lifetime. And so you're going to have to realize that you've got to look for exceptional opportunities. You don't want to get involved in mediocre things. And so one of the things that have happened in the past that is so difficult is having to make a decision that you've made a mistake, that the investment decision that you made was wrong, and that you have to have an exit strategy. Jesse Livermore basically had a quote. He said, "A loss never bothers me after I take it. I forget it overnight. But being wrong, not taking the loss, that is what does damage to the pocketbook and to the soul." Having to use a stop-loss discipline is absolutely critical. It's the problem is that out of say 100 ideas, you might find 10 that are okay, but out of the 10, you might have 1 or 2 that are exceptional. So you don't want the other 8 to eat up the progress that you're making on the 2 exceptional situations. So you've got to use a stop-loss strategy. Now here's an example. Chipotle Mexican Grill. I don't know if y'all remember this story, but it was back in the days when Whole Foods was catching on and everybody was eating healthy, and Chipotle was advertising that they had food with integrity. Well, guess what? They got in trouble, and they started having food that didn't have integrity. In fact, they had food that was making people sick. So here we are. The stock, basically was in a real choppy uptrend. I was in the stock at one time. But you can see here where it kind of formed a top, and then it broke down. Now, this idea of a price box is important. So you break down below the price box. I think it would have made sense to stop this stock and say, hey, I've got a problem here. I've got a mistake. Moving averages are going down. You've got the death cross, the whole deal, and look what's happened. This stock is basically collapsed. Very important to use a stop loss. And regarding that, the problem with stop losses is, especially for novice investors, is that they think, some people think that, you should just get it right the first time and there shouldn't be a reason to sell. You're going to make mistakes. There's no getting around it. I wish that wasn't true, because I don't like turnover. I think turnover of the portfolio is a bad thing because you're making a lot of mistakes. So you want to keep turnover down. You want to keep your mistakes at a minimum, but you've got to use a stop loss. Now, here's one that was kind of frustrating. This is Royal Caribbean Cruise Lines. Again, breaks down, stop out, but the stock is kind of coming back. So, you have to say to yourself at that time, okay, I wasn't right on this decision at this time, but there may come a time where it does become a right decision, and it has a lot to do with the overall market and the overall economy and what's going on. So, you can always buy the stock back. That's kind of my attitude about it. Now, here's another disaster that who would have thought? Here we have Under Armour. This was a tough call. This was a real tough situation because, we're talking about tennis shoes. We're talking about things like Nike, and, it's pretty basic stuff. Well, the stock broke down, and it's just been in a downtrend ever since. So you really needed to stop out of this situation, and you can see where it is now. In fact, they just reported quarterly earnings for the fourth quarter. Not good, real bad. Here's another restaurant chain, just to kind of stay on the restaurant chain thing. And then, like I say here in this quote here, you must weed the garden, which means that if you got a good, healthy garden and everything's going well, you got to get the weeds out. And so here we have Zoe's Kitchen, which was a great idea. I thought it was, at least at the time. but it just didn't work out. It just continues in a downtrend. So basically what I'm trying to say here is that using a stop loss can protect you from making decisions where you could see the other problem here is something called overhead supply, because once you realize that you've got a bunch of people that own that stock in this area here, and then you get down in this area here, every time that stock tries to come back up again, you got these people selling on you and dumping on you. You could sit there and write the thing for years. So if you have any questions, give me a call, but stop loss is very, very important. It's critical, in fact.